Do you ever wish you had a new trading strategy that you knew actually worked and was actually used by professional traders to add to your trading? Well, in this video, we reveal one of those strategies for you, one we call the sleeper trade strategy. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to have developed numerous 7 and even 8-figure per year traders. We hope you agree this is the top YouTube channel to help you grow your trading account. In this video, you will learn 4 important trading lessons to help you grow your trading account. 1, this is a trade we're about to reveal with structural edge, the highest form of trading edge. 2, this is an example of a very solid playbook built by one of SMB's traders. One, which you can use as a template to build your best playbook. 3, it's very important to have your trades affirmed by a senior trader, particularly when you're just starting as a trader. And 4, this trade offers you a savvy idea of more trades like this that you can find to help with your trading.
Okay, so today we're looking at a recent play in earnings day 1, what we're calling sleeper, which we'll get into what a sleeper is in a second. And this was in Crocs on April 27th, pretty much in the height of earnings season here.
Hey, Eric, if you can just give us a little background on how you came to SMB and your background.
Sure, my background is actually as a chef. Went to school up there in your neck of the woods.
We should be enjoying some great food here while we're doing this.
Yes, exactly. So I did that for quite a few years and did the whole New York City scene, Michelin star circuit, competed in that industry at a high level, went off on my own, did some restaurants, started and sold them. And then by the last one, I was somewhat looking for an exit strategy. That's where I came across trading. That's where I came across SMB Capital, and I jumped into the courses, took both courses, and then went through the tier system in the Discord, and was hired on last month, and now looking forward to my new career.
So you came in through SME training. So you came in, as we say, through the back door.
Yes, I did.
Okay, that's interesting. So you came in through SME training, you took DNA and the winning trader, went to the tier system, stood out, and got hired for the desk.
That's been, that was pretty much the past 8 or 9 months. Yeah.
Cool, awesome. Well, glad we have SME training. Tell me about, so you ended up exiting, you sold a bunch of restaurants in the past.
Yeah, so once I had the experience from culinary school and in New York, I kind of branched out on my own and had a habit, I guess, of starting concepts. That was more enjoyable part for me, was building out concepts in the business, and would run it for a few years and then sell it. So we did that about 4 times, and over the years, by that time, number 4, we had a farm attached to it, so it was farm to table, and it was a lot of work. Industry was changing, and as I said, looking for an exit strategy from restaurants. But it was very good experience, and had a good career with it.
Now, do you have a favorite dish?
You know, being on the farm and raising animals, it's been kind of we do a lot with pork and charcuterie, so dry curing stuff, and making your own sausages and salamis and prosciuttos. We've dabbled in a lot of that, and actually sold a lot of that at the restaurant. So really enjoy that process of combining the farm and the restaurant together.
Very good. Lance and I just came from lunch with some people who flew in to see us, and we went to Del Frisco's, and we had the filet burger with caramelized onions and white cheddar and bacon. So if for some reason I don't make it through the full video, and my heart stops.
Without falling asleep.
You know it was Lance's fault.
Every good restaurant has to have a really good burger. And last time we spoke, you mentioned the Ghost restaurant that was going to open. Is that open and is that doing
Yeah,
well?
right next to our apartment. There was a ghost restaurant opened up that serves the food from 8 different restaurants, and
Yeah,
they just deliver.
really cool concept. Probably wouldn't work for me in this rural area, but for New York City, I'm sure it's a really cool idea for a lot of different restaurants.
No, really good. Did you have a favorite restaurant when you were in the New York area?
Oh man, depends on the category, but if you just say like fine dining, Le Bernardin was top notch and still is. I worked at a few Michelin places, like Aquavit was one, a Scandinavian, three-star Scandinavian restaurant. That was really cool. But it's so hard to pick one in New York City, 22,000 some odd restaurants, and um, the best of the best. You know, it's the best place in the world for that scene.
As well as everything else. Um,
Exactly.
all right, great. Let's see if you, pardon my pun, let's see if you have the ingredients for one good trade here. So let's go through this trade and see what you got.
Okay, so Crocs, earnings day one, we're calling this a sleeper trade. Just to give a little bit of market big picture, we have been very much range bound for over a month now, and we're pressing a retest to the top of that range, which has been fueled by some of big tech earnings. However, all these indices have spent most of their time within 1% of their daily 9 EMA, which indicates a directional uncertainty. So I use that indicator from time to time, and it kind of just helps understanding where we're at with the market in terms of direction. And certainly in this case, we have a lot of crosswinds that the market is considering, uh, including better than feared Q1 earnings on one hand, and then on the other, of course, we have FOMC's approach to the interest rates, regional bank failures we've seen for the past couple of weeks, and still relevant. And a new one approaching is the debt ceiling deadline. So a lot of crosswinds, and I think what this tells us on where we're seeing the support and resistance here within the market, we're very much in range, and for us as traders, we want to be focused on day one or day two catalyst that we would grade a positive or negative 8 out of 10.
All right, great. So when we are doing these playbook reviews, I like to give traders a score on 10 different variables or elements that go into a playbook trade. And those particular variables are stock selection, the big picture, trade strategy, intraday fundamentals, technical analysis, reading the tape, trade management, technology, your overall review, and diligence of presentation. So as we're going through this, I'll give you some feedback on a scale of 1 to 10 as to how I thought you did for each one of those particular segments. And the idea for somebody like yourself who's trading live is you want to do overall, you want to have a score overall of over 90, such that you're doing this work in a way that's tracking towards you improving as much as we expect you to. So, on the desk, you should be able to get 90 or above out of 100, and we'll add this up at the end. But in terms of the big picture, I think this is solid. That's a 10 out of 10 in terms of setting this up. So good start.
Good, and I would also point out here some of the market internals. VIX we've seen very compressed, well under 20, and actually hitting a 52-week low
Yeah,
around
and the
16.
thing I like about that is you do a good job of just showing the levels for the market overall and understanding above this price is significant, below this price is significant. Those are going to be buyers and sellers that come out if we get above or below certain prices. We start all of our trades understanding what the big picture of the market is, because that very much dictates price action. So good start.
Great. So we'll dial it down a little bit more into sector, and Crocs falls under XLY, consumer discretionary. So on this chart, we have indicated with the candlesticks the XLY. And what I did was just look into this sector a little bit more specifically to casual footwear because there's quite a few names that trade. And I took the top three basically and overlaid it on this chart, comparing it to the sector. And of course, the sector is, as we'd expect with the market, very range bound. And then you can see each line a different company. So ON also recently just reported very solid earnings. Skechers and of course Crocs leading the way. And I thought this was interesting to put the overlay on top of just to see that this particular sector is strong and the names within it are strong, and the name that we are trading is strong. So that could play into things once we get into the catalyst.
Agreed. Good work there.
Okay, so Catalyst is earnings day one, and their metrics were actually quite good. They beat EPS by 21%. They beat revenue by 3%. However, what we're seeing in this market, I would say, is a very relevant theme, is the guidance. I think guidance always has attention to it, but in particular now. And in this case, it was a weak Q2 guidance, highlighted here in red. So the revenue was meant to be 1.02 to 1.04 versus the street of 1.06, and the EPS 2.98, and that is well below the consensus of 3.23. So their full year guidance, which normally we would put more emphasis on the full year, but I think this is just a storyline to the market right now of the uncertainty in the short term. And in this case, what got our attention, and I think what got people's attention on this day one, was the light Q2 guidance. And we're also seeing a particular emphasis as well on conference calls. And in this case, the CEO cited some overall consumer weakness, some higher inventories, and decreased margins in the overall casual retail sector. I think this was a little bit misunderstood on the call, where the listeners and investors might have interpreted this specific, and they later came out and there was some commentary a little bit more specific, saying that he was talking about the overall retail sector. So important to listen to the conference calls and watch the price action and see if there's those kinds of indicators that could move price action.
I'd like for you to, in the future, add just one more thing. I thought this was solid, but I would add one more thing. We get a bunch of research that's sent to our inbox. I would
Mm-hmm.
love for you to add, you did a quick query, you looked at the research that was in our inbox, and you found this analysis on this particular stock from one of the better analysts who sends us research, and included in there what their analysis was. I think that'd be pretty helpful for you going forward.
Makes sense, absolutely. And so we give this overall catalyst, all things considered, a negative 8 out of 10, and that gets our attention for sure. So now we get into the actual trading strategy and what we're looking for setup criteria. Here we have the catalyst of mixed earnings with soft guidance, and a larger long-term participants having shown a directional bias, which is counter to this recent catalyst. And that's an important note, I think, because as we saw, Crocs has been strong within its sector, and we'll see here in a minute with the technicals that larger, longer-term participants are bullish on the name and have been steadily increasing its trajectory. So if in this case we get a negative catalyst, maybe we see some larger participants offside. So trade possibilities that we would look for: a potential stuff pop at the open, something like a a low volume kind of unsustained move up that is stuffed at a key level. We possibly could see a pre-market low break that would get us involved, or potentially a momentum move to move, which ended up being the trade in this case. We're also looking for price above 20, and in this case also daily volume between 5 million and 1.5 million. And we have that highlighted just because that's a little bit different than what we normally do, is looking for as much volume as we can get. So this trade's a little bit different. And with that combined, we'd also like to see on this day a very high R ball of at least 10 and a gap percentage. Usually we have with earnings anyway, a plus or minus of 3%, a float of under a million, and another key metric that we look at is the institutional ownership when referencing the larger long-term participants. In this trade, we're looking for a high IO of at least 85%. Reasons to enter our trade. So we could look at some of the tape behavior, and what we would want to see for this particular trade is a low volume pop off the open with a key uh, resistance and a stuff into that level. We would also like to see bid effort at lows with some effort to hold support, but followed by sellers stepping in and rejecting that move, causing a break of key levels. And we want to look at volume specifically, sustained volume of at least 200,000 shares for a 1 minute bar in the first 10 minutes. And what this means is that it's trading basically its A vol in the first, very early on in the opening within the first 10 minutes or so. And also volume and momentum picking up and accelerating through key levels in our favor. We don't want to see stuff get sticky. We're looking for clean moves in these particular trades. And looking at reasons to exit, it could be any combination here of these, but price hits an ATR multiple combined with slowing of the tape. And combined with slowing of the tape is important, and we'll see in this trade hitting 2 ATRs sounds like a lot, but there was still very much a lot of momentum at that level. So we want to be watching the tape as well as the levels. And a 5 minute retracement candle, possibly for like a positional trade. A clear shift in momentum on the level 2 or tape, anything that we're seeing as far as bids stepping in aggressively against us. A break of the 21 EMA on the 2 minute chart. I use this a lot for trailing the last piece. So if we've exited the majority of the trade and at our target, we want to still keep a piece on to let it go further. We can trail that against the 21 EMA. We would exit on any type of volume exhaustion, which just dies out. And then, of course, if your stop's hit and we're wrong on this idea, we're not always going to be right. And even if we are right, I think it's important that if we recognize we don't have the best execution in this, that a break-even stop is appropriate.
Yeah, I really like this trade strategy. I like it for a couple of reasons. It's very specific. For example, you are pointing out things like Arval. You're pointing out things like, hey, what's the institutional ownership? We'll probably get a chance to talk more about why that's important. You're talking about when you're entering, not just that you want to be on a certain side, but you're pointing out things you want to see from the price action that's going to confirm that there's a trade on. And I think your reasons to exit are very specific and detailed, as opposed to what a lot of traders do is they maybe just have one or two ideas. You're comprehensive here. So when we talk about just giving you feedback on trade strategy, this is spot on. That's a 10 out of 10. We want to see more work like that, more specific work like that with your playbooks.
Okay, so if we move into the technicals, a little bit more on Crocs specifically. On the left chart here, we have the daily, and we can see indicated by the yellow dotted lines a clear upward channel that it's traded in. And this goes, I zoomed in a bit here, it goes much further back with a low of like $46. So it's been quite strong over the long term. And we see also this period of consolidation that it then broke out of. And clearly, in the past couple weeks coming into earnings, people were buying this name. So that gives us a few levels technically to work off of on the longer term. And we're also seeing that we're very much close to the 52-week highs here at 51. Just another side note is the volume. This was the day that we traded 10.5 million shares. And if you look back on the last earnings day, again, we're getting very, very elevated volume compared to its normal trading. And then the chart on the right is a 5-day, 5-minute chart, and gives us also a few levels to look at. And the 142 and 145 levels were relative, but of course pre-market this was gapping into 140, and so we're looking at the 135 and 130 zone as support, and that comes into play with our trade. So a little bit on the longer term and shorter term of the technicals.
Yeah, good. And some more feedback. This is what we want to see when you're looking at the technicals and breaking down a trade. You just want to, what are the key levels? And let's be cognizant of the key levels. If it gets below a particular price, this is going to bring out sellers. If it gets above a particular price, it's going to bring out more buyers. Good job looking at this on the longer term chart so we can see these key levels. And I liked the way that you honed in on the volume. So that's, again, 10 out of 10 for technical analysis. So good start. Where are you going to falter?
Let's see.
So far, I think you probably were a pretty good chef based on how you're doing here.
Details, we used to say. Devil in the details. Okay, so look at the fundamentals of Crocs, and I highlighted what we're specifically looking at in this trade, which is the AVOL. 1.5 million, it's very low compared to, say, a Tesla that would trade 100 million. And you combine that with, on this day, an RVOL. We saw RVOL of like 25 plus off the open, and it was sustained above 10 all day long. So that should get our attention as traders, and that creates, I think, an opportunity here when you compare it to what it normally does. So on this day we did 10.5 million, and I also think what's important, where's this volume coming from? And in Crocs we have a 93% institutional ownership. So if we've seen in the technicals that it's been run up into earnings, if we see in the technicals that it's been very strong in the long term, and we're seeing that it's largely institutional ownership, that if they're wrong or if there's some kind of change in these fundamentals driven by a negative catalyst, that we could see them off sides a bit, and that could create opportunity as they would potentially have to exit a position. Also some notable fundamentals, the ATR is 5, so plenty to work with there. A float of 59 million is particularly low, I thought, for a name like that. A short float of 9%, which is not insignificant. And again, as we mentioned, in the upper, nearly to its full 52-week range.
All right, great. So let's go over the intraday fundamentals. Can you just turn to the next slide?
Mm-hmm.
So in terms of intraday fundamentals, I'm looking at I'm grading you based on that previous slide, if you bring that back up, and then your catalyst slide. And so again, as I mentioned before, I would just love for you to include notes. I want you to get into the habit of, hey, I'm thinking about trading Crocs. Let me go check the research.
Yeah.
And I want you to get into the habit of pulling out what people who are covering this stock are saying about it. I think that's going to help you. And so on intraday fundamentals, we're going to call that a 9 out of 10, and it'll go up when you start including pieces from research that were getting sent to our inbox. Does that make sense?
Yep, totally.
I just want to see that. Okay. All right, good.
All right, so a little bit of technology. This is not necessarily high tech, but it was simple and effective use of technology, I think, for this trade. And what we did was take a list here of what we're calling sleepers, and this gets into the idea of where we can create edge in the market. And for me, in particular, I've found that the less crowded names can provide opportunity if they trade cleanly and if they have enough volume. So that's why we'd be looking for day one strong catalyst. And we also just wanted to quantify this a little bit, and just simply we took a range of 1.5 million to 5 million AVOL, and went back and looked at their earnings day one volume for the past year. And all that did was create a multiple. So SE has a 4.7 AVOL, but averages nearly 45 million on its earnings day one for the past year, which creates a 9 multiple. So very high, and we would look at that certainly for the next play. And these would be the top 10 names, and you can see some familiar names there. I think the threshold for me is 3, So we have sorted a list here of names that do a low A vol, but on earnings day one do very, very high, and put it into a scanner or top list, and we can sort that by earnings date, upcoming earnings date. So I can just quickly reference this in the morning and see what's upcoming in this type of sleeper play. And then the other piece that was effective in this trade is a little thinkorswim script that I have specific to ATR. And this just represents, each blue line represents a half of an ATR. And you can see in this case that we went 1, 2, 3 ATR moves straight off the open. And this just is really helpful to compare a move relative to RVol and relative to time. So if this comes 3 ATRs in one move, that's significant. So this little bit of technology I use a lot. I use it for nearly all my trades, and as just checking my favor to understand realistic targets when it compared to RVol and time.
All right, great. Yeah, I think this is a good job with technology. I like the way that you built this sleeper scanner. I like the idea behind it quite a bit. Solid 10 out of 10. Yeah, and I do want to just give you some feedback overall on the stock selection, which we didn't talk about yet. This is a 10 out of 10 stock selection. I particularly like the stock selection because the earnings are unusually bad. They're unexpectedly unusually bad.
Yes, that's key. Yeah.
That's going to potentially set up a stock that's going to trend intraday, and if not for multiple days. That's textbook how to find. I call this a changing fundamentals play, where hey, the stock looked healthy, now all of a sudden it's not as healthy. The street wasn't expecting that, and now we have that information. But I also like a couple of other things about this stock that I think makes for it to be a particularly powerful trade, which is you've got unusually negative news with the stock that's near 52-week highs. Think about all those people who have big money positions, who after they've read the earnings report have to sell or will want to sell because what they thought prior about their investment was not true, was not accurate. They're going to want to get out. And then there's going to be people who want to jump in on the short side. And so you're going to get an opportunity for the stock to move a lot in a particular direction because it was near 52-week highs. There's just people have to sell it. And then the other thing is, I liked how you mentioned the institutional ownership. So institutional ownership means there may be some big orders to sell. If the institutional ownership's high, maybe some big orders that are coming in here. So I like when stocks are at 52-week highs that all of a sudden now are saying we're doing way worse than you all thought. That can make for that's good stock selection. That's going to bring out some selling. Okay, good.
Okay, so we dive into the tape a little bit more granular here. And this is a couple minutes starting right off of the bell. This day in particular, earnings was very busy. I think Amazon was on this day. And so this was like 4 or 5 on the list. We had it looked at and game planned, but not necessarily dialed in on. But this price action off the open is what got my attention. And what I noticed particularly here was this 132 to 132.50 area, where in the beginning we're seeing bids stacked up here, and you'll see some size start to come in here, and this is an attempt to hold levels. So we get a pop through 133, we see size on the bid side, and this is all good for what we'll then later set up. And
now, is this the pre-market? Have we opened and we've opened? It's 9:36.
Yeah,
is it open? Oh, yes, I see NYSE on the yes. So it's open. Okay, good.
Yeah, NYSE's open. This is like just 9:32 first couple minutes. And this is the first attempt to hold this level at 132.50. And I think what then creates the play down the road here, which is a failure of these people here on the bid side, which are stacked at this level and putting in some big orders. So we see a flush there through
Can you
that.
go back? Can you actually go back? And let's start again and show the 132.50 and how they were stacked up on the bid.
Mm-hmm.
And then let's show the first time we see, yeah, so we see that, right? Look, stop.
Yep.
So we see all those people there at 132.50, right?
Yep. Stacking up.
So they're stacked up there. And then let's see what happens on that bid. So we see the 132.50, big bids. Stop. Now stop for a second.
Yep.
And we think that the stock's going to trade lower for the most part, right? Because of the unexpected, unusual bad news, right?
Yep. And this was a first move down, so it's already been a little bit lower.
And so we're looking for places to probably short,
but we want to see it, right? We want to see some confirmation from the tape. So if we can see some bids get whacked out, maybe that's a see it moment for us. If we can see some levels that fail, maybe that's a see it moment for us. So that's why you're pointing out that 132.50 area, those bids, and what happens there. All right, let's
Exactly.
so let's play it. Keep playing. We'll go through it again.
So still heavy on the bid side. Big orders come in there. Pop to 133. It's a good effort.
Fails a little bit. Guy drops the bid. I don't see those 132.50 bids anymore.
Right?
Did they just disappear?
Yeah, and then now whatever size is coming in is a bit lower.
And they hit those bids, and they hit those bids below it.
Yeah.
Yeah.
So that was a quick $2.50 drop, pretty much.
And look at the way the bids are getting hit pretty quickly there. Those bids got hit pretty hard there at 132, didn't they?
Right. The speed and the velocity of which that drops says more to me about what the bid side's doing.
Yeah, people went out.
So we're failing to get back to that level. And then the next level that we've tagged on our technical analysis, 130, which drops very quickly, virtually no bids there. And it does come back. It does try to get to it, but what you'll see is a very, very weak effort at the 130 level. And that was, so this is where we first started to get involved on that flush. And we wanted a place to then add. And this 130, I offered up to 130, which we'll see, and we'll see why. And then this 130 that for a couple seconds it holds and cannot reclaim it, cannot hold it, and that's where we really knew that the trade was on. So we're getting close. They want 130. Bids are still here. At this time, so there's the 130 level, and that's it. So 130 doesn't print again. It makes a couple attempts to get higher, but that was, to me, a very weak attempt. We actually got tagged at full size at 130 there. And that's where we saw, I think, just a weak attempt of the bids to reclaim a key level of 130, and felt in the driver's seat with this trade after that.
Okay, good. I like how you're searching for the tape to give you some more clarity on what to do. You're confirming your idea. I think those are the best trades. You develop the thesis. This is unusually bad news. This is probably going to go down. It's at 52-week highs. There's probably more people who have to sell. Maybe this is even going to trend intraday and have a really big move down. There's a lot of institutional ownership in here. Those people have to dump. They probably got big owner. They probably have big size. But you're not just getting short. You're waiting for the price confirmation as well. And it's so tempting for traders to just get short. That tends to not be the best type of trading that people do as active intraday traders or short-term traders. And there's lots of reasons why that is, but I think too many people think they've got to figure out what the direction the stock's gonna do before the open, and just rely on their analysis of the news. And you do want to analyze the news, and you do want to understand the news, and it's great to have access to research, but when you have that price confirmation on top of a negative news catalyst, those are better trades. So in terms of reading the tape, I think this is a 9 out of 10. I would love to have seen the price confirmation from the tape be a better price relative to the open. We opened around 133, if my memory is correct. And then now we're getting short around 130. We saw a little bit more of a important level at 132.5. And in short order, in a short period of time, we're now thinking about shorting 130, which is a different price than 133, which is a different price than 132.5. So I would have liked to have seen that price confirmation be at a better price relative to time. Does that make sense?
100%. Yeah, it's a very good point, and we could talk a lot about that too with the executions and where we chose to get involved, and then therefore the stop. And I think we can avoid what your point with future trades, and just knowing that this is a good setup and game plan this and beyond it. We kind of pulled this up, a few minutes after the bell based on this price action and seeing, but completely understand that point. We'd much rather be involved right off the open, maybe a first move down, and to see that that acceleration in the tape right off the open. Okay, so into the trade management part of the execution. So as we mentioned, no doubt, so this level 134, 133 would have been a great, and this ties into the pre-market lows as well. So I think the ideal setup on this would be a break of pre-market low, or a first move down setup. So just looking at some of the other bigger names, we got involved here at the 132 level, which we just saw on the tape. These wicks here on the candle, I think, are representative of those bids trying to hold levels and trying to push the move higher. And on this next candle, we see a failure. And so we got involved at this 130 level. And then again, referenced on the tape, we just saw this hit print 130 for a few seconds, and we had offers up to get size there. And the stop was then therefore this area where the bids initially were, 132.50. And I think, ideally, a stop high a day would really give you a higher, this stop at 132.50, you got a higher chance of getting stopped out. But it also gave us the opportunity to put on more size. So we kind of did the balance there, took a little balance there, and we're able to get size on here at this 130 level. And then the first take was at a 1-to-1, just to pay for the trade. We took a quarter off here. And then you could just see the acceleration come through 125, and we added back size. So this was back to full size. And these were momentum adds, so we should not expect this to come against us at all. And then using our 3ATR metric.
Are you a really good scalper?
No.
I don't like those ads there at that price then.
Yeah.
You need more sideways action. You need more time to go by to be re-entering. I don't mind you re-entering. I don't think that's a good re-enter unless you're wicked fast.
I don't disagree with that. I think it's a great point, and I go into this in the improvement part of this. Like the ad was here 128. We saw this move. We're involved. We saw the 130 try and fail, and to get better at scalping is an improvement here. And to add at this break of Lulos on this acceleration, I think is, that's 2 or 3 points higher. So point well taken. So then just on the exits here, we took off another quarter and a half at 122. That was the 3 ATR move, and we just had a small quarter left.
And a slowing too.
Right, you can start to see the 122 level hold. We did have another little flush there, but that was quickly reclaimed. So we were happy to take the trade off there.
And it's vertical. It's those are good. Those are good covers. It's steep.
Very steep.
Yep, it's steep. You got a lot of risk there. Those are good covers. Just to go over your trade management,
Yeah.
I waffle between an 8 and a 9 on this. I'm gonna call it an 8 because probably I want you to spend a little bit more time on this. I mean, this trade management can really make the difference between a good trade and a great trade, a good trade and a bad trade. And so we mentioned this before, same critical feedback. Your prices could be better. And I think you should be fighting for better prices, both when you originally entered and when you wanted to add. And so I think we're going to call that 8 out of 10 based on improving your prices. Okay.
Yep, I agree with that 100%. And we talked about this a lot in our group and our team with this trade, and they were challenging. What happened if that goes against you? At those ads.
It'd be 2 points higher, and you'd be like,
Right.
you'd be focused on how you messed up the ads,
Yes.
which would be taking away from your concentration on your good overall trade, and you'd be in a tizzy.
Yeah, exactly. Yeah, very good point, and I agree with that score.
But I like you looking to add, because this is a particularly good negative news catalyst where we would expect a big move. And the stock selections, we don't get 10 out of 10 stock selections that often. So I like that part. I don't want to discourage you from adding, but you were too aggressive in your ad here. It was too risky.
Yep, and I think just improving, I'm particularly a move-to-move trader, and I would say that was the entry. And I think you can have a trade within a trade, and I think you can continue to update narrative, but just getting better at that faster momentum scalping will give me those better prices, I think. Okay, so the good points of this trade, we recognize the weakness in this price action fairly early. I think it could have been earlier, but it was in a name that was not on our watch list, and I think we did well to connect that to a common theme of weak guidance causing sell-offs, which we had just seen in ENPH the day before. And that was actually a lot of motivation in hitting that where we did was just seeing what ENPH did the day before, same thing. I think we did well to find a way to responsibly get involved, even though the ideal entry had passed. I think we used a bit of technology specific to my edge to time the appropriate exits and not sell too much too soon. I think we can, I know I'm guilty of this in some of these outlier moves where we, in this case, saw 3 ATR straight down off the open. Selling too much too soon, I think, can be detrimental. So we did well in that sense. And we also updated the narrative from what started as a positional trade into a momentum move-to-move trade as price action revealed itself and accelerated. And then on the improvements, I think with this trade now, it's been enough to know that there's edge here and to really track this a little bit better. So firstly, staying engaged for better re-entries on the setups throughout the day. Oftentimes we see these big moves and then weakness continues to set up throughout the day. And I think there were some other secondary trades to stay involved with the name. I think as we talked about getting bigger earlier and taking the signal that the acceleration through the 128 low of day was the place to add the momentum lots. And then that trade shouldn't go against you. And by doing that, we're essentially adding size without risk. And as we pointed out, the ads were probably pretty low compared to, well, they were low compared to where the name had just come from. So now that we have this idea of the sleeper names, we need to be prepared for them going forward. In this case, we weren't as prepared as the opportunity provided for us. So just continuing to track these names with low A-vol, using the metric of 3 times that on earnings day 1, and using that to track names ahead of time, game plan them pre-market, and be ready for them off the open. Using successful backtesting, we'd like to get more specific with what we showed in the technology here section, like to get more specific on the earnings day 1 volume, and also is there a threshold there of institutional ownership that we want to see? Is it 85? Is it 90%? And that's where I think we get those strong, clean moves that we saw in this case. So a good trade, but still plenty to improve upon. And that was Crocs, earnings day 1 sleeper.
So let's just go over why this is a particularly good trade and why I would encourage you to continue trying to build out this trade in your playbook and in your career. And this is an unusually good opportunity. And so we were talking off camera before we jumped on here, and we were talking about when we're thinking about adding a trade to our playbook, to take a wide lens approach and ask ourselves, does this trade really have edge? And just overall, is there edge with this approach? And that's different from, if I take this setup, would I make money? This is, and this veers into an area I like to think about as structural edge. And that just essentially means, if I'm a player in the marketplace and I take this trade, do I have an advantage over the other market participants in this marketplace such that I should continue trying trades like this? And again, that's very different than, if I make a trade, will I make money? You can make trades and make money that don't have a structural edge, and you can make trades that do have a structural edge and make money, and the latter is way more important than the former. The latter is how you actually build a career and how you put big trades on. And the reason why this veers into the area of structural edge, and you should continue making trades like this, is because it has an unusually negative news catalyst. B, it's near a 52-week high, and people have to sell out of it who are long, who were wrong. And C, you've identified some stocks that are less competitive than others by looking at the volume in them. So you talked about lighter volume and scanning for that. So you're factoring that in as well. And then the fourth thing is obviously the time frame for which you're attempting to take the trade. You're sort of getting in, you're getting out. Big hedge funds, it takes them a long time to get out, and you're noticing the footprints from the big hedge funds and institutions, and you're getting in for a little bit of period of time, and you're getting out. You're using your adeptness, your quickness, your lack of need to trade with super huge hedge fund institutional size to your advantage. Your fleet of foot. I'm in, I'm out, I'm done, I'm out. Go find something else. That's a huge edge. And so, when you put all of these together, it's just not a setup that made money. It's a setup where you've got a huge advantage over other market participants. And those are the best types of trades.
100%.
You're on the right track here. So I hope that made sense in terms of taking that wider lens and trying to figure out whether or not you just actually have overall edge. And I think if you do more of that, that'll make you a better trader. And this has that. For the scoring aspect of this, there are probably people waiting at home to see what your final score is and to see if you did well enough. We want you to be above 90 to be tracking towards making enough progress in your career. And so we'll tally it up. Stock selection, 10 out of 10. Big picture, 10 out of 10. Trade strategy, 10 out of 10. Intraday fundamentals, 9 out of 10. All right, you're still in the game. Technical analysis, 10 out of 10. Reading the tape, 9 out of 10. Trade management, 8 out of 10. We can do better there. Technology, 10 out of 10. Review, 10 out of 10. And lastly, diligence of presentation, 9.5 out of 10. That gives you a total of 95.5, if I did my math correctly. So that is you doing a good job here. And we want you to be doing all of your playbook trades at least as well, if not better than this. And if you do, your improvement's going to compound day by day, and you're going to make some real progress.
That's great. I'll look forward to that. And this was a lot of fun and very, very useful and helpful. So we'll make sure to apply this, as you said, to all the playbooks.
Is there something that I can help you with while I'm here?
No, this was great. I was wanting some confirmation on this sleeper idea, and if you felt that it was worth looking at as far as low volume particularly. So that was very useful, and this is helpful, so I appreciate it.
Yeah, I do think my feedback on that can be very helpful for you. I say that, no, I hope that came out the right way, by the way.
Of course.
I mean that but I mean that as an observation, not any other way. So, because I do think that's important to have a senior trader, somebody with more experience, say, hey, you're on the right track here. Like, you should study more trades like this. This is worth your time, as opposed to you trading some other trades that maybe they happen to work, but aren't really going to help you build out a career over. This is a trade you want to have in your playbook.
Yeah, and that's super important to get away from the P&L, whether it worked or not P&L wise doesn't matter. To dial into the details like this, that just it's motivating to do more of these for sure, and to spend the time doing them.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training.
That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours, and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.